Thank you. Perfect. Sweet. I'm just going to load up the charts because it's not working on Safari, so I'll just do Chrome. Just loading up the charts. Let's try now. Perfect. I'm going to share my screen now. Let me know if the screen size is good and everything else. Should be sweet. Can you not see the screen or not quite? It's not showing. Sweet. It's caught up. Good to go. Welcome everyone to the live. Just seeing a few other people in the chat. Drop me a message if you are watching live. Great to see everyone in. Everyone should be able to see the screen before we dig into the technical side of things. Sweet. By the way, any questions throughout the live, just let me know. Drop them in the chat. We can cover them towards the end. That'd be great. So what we're going to be doing today is covering a very key topic of daily bias, something that people struggle with massively in the space. And the truth is, if you understand this simple concept, it would drastically improve the course of your trade results. So we're going to go through that. We're going to talk about these two trades that I'm in live, and then a couple different examples of how this actually plays out in the markets. So let's get into it. Right, so to start things off, before we get into any sort of trades, I want to break down something for you. Okay, so this is going to make sense when we start to dig into the technical side. Daily bias. Does anyone know what daily bias is? Drop it in the chat if you do. If you don't, of course, let me know as well. I'm going to break it down for you. Right, so let's get started. Right, daily bias. Just to make things very simple, there's a few things that I'm going to look out for, so I'm going to keep this as black and white as I can. In an uptrend on the daily time frame, the first thing that I'm looking to do is identify market structure. The truth of the matter is, if you can read market structure, you're going to be good for a lot of the narrative, right? So let's just keep things simple. If we just mark in, first thing, market structure. Higher highs, higher lows in this example. So we've got higher high. It's disappeared. Let's make that visible on the 1-hour for you all. We've got higher high, higher low, higher high. Market structure is clearly bullish. Higher highs, higher lows. Following this BOS, this break of structure, we've had a pullback. Can you all see that? Okay. So then once we've got that pullback, all we are looking for is a mitigation of two different areas, which I go into a lot more detail inside Envision, but I'm just going to break it down for you briefly. Number one thing, decisional. This is the OB, the range that causes the break of structure, right? So usually before price takes that swing point like this, price will usually pause. This is for the reason and the purpose behind this is to tempt those early sellers into the move. But this whole move, if you're going to sell off on that, is a trap because the stop loss is above, right? And the truth of the matter is market structure is still very much bullish. We're moving to the upside, okay? So this is very important to understand. Now, that's the first one. The second one is the extreme OB, which is at the origin of the move. TradingView isn't allowing me to draw this on the chart for some reason. Let me just refresh this quickly. Ideally, it'd be nice to draw some drawings on, just to explain things better for you all. See if it wants to work. There we go. There we are. So, two different OBs. The extreme at the origin of the move. Decisional is the range / OB that causes the break. So our three factors in identifying daily bias is number one, market structure. Let's make this bigger for you all. Market structure. Number two, a doll / drawn liquidity. That supports the daily bias. And number three, tap into a PD array with momentum backing up. Truth of the matter is, if you can master these concepts, you will do very well in the markets. And it's that simple. All right. Now, there's other things that come into the equation, such as time in the market, being able to hold, control yourself, control the emotions. We all know that, right? But the truth of the matter is, your narrative is the most important thing. If you can get your narrative correct a lot of the time, you can do very well. Entries are secondary. Narrative is the most important thing. Big believer in that. So three things: market structure, higher highs, higher lows, or lower lows, lower highs. Then a doll to support that daily bias, in this case, bullish pricing. And then we have a tap into a PD array. So in this case, extreme OB, and we have that impulsive move away. Does this all make sense? Put a little yes in the chat or a Y in the chat if this makes sense. Okay, breaking it down very simple for you. This is as black and white as I can keep it. Let me know if this makes sense. Should do. Perfect. Thanks, guys. So that's the daily bias. Then what you've got is H1 order flow to then back that up, which is using the same concepts. So focus primarily on two different time frames. Daily, number one, to keep things simple, and the 1 hour. If you can align those two things, lower time frame entries become very much secondary, which I'll show you in this webinar. So the 1 hour, if we're taking this leg and we've tapped into this PD array, and all of a sudden you see market structure, look like this. So what is this? This is a bearish trend that's changed into a bullish trend. So this is the H1, remember? So the reason I use the H1 is because I've always been familiar with it ever since the good old-fashioned Falcon days in 2018. I started off on the 1 hour, so I think it's a very clear time frame, and I've had a lot of success with it. Here we can see that we've had lower low, lower high, lower low, then into a higher high. Okay, so at this point, we've had a shift in market structure to the upside. This is a potential change in order flow. This is not a confirmation of order flow change until we get higher high, higher low, and a higher high. However, at this stage, when the higher high isn't printed, as long as it's backed by intention, now by intention I mean aggression in the markets. This is the bigger boys, the bigger players' footprint into the market to show movement. So as long as it's backed by that, I'm looking to play off the back of that. Now, what we then have is, once again, same thing as a daily bias. We look for two different taps into these POIs. Number one, decisional, the range that causes a break. And then the second one is the extreme. Keep it as simple as possible. Every single one of you that trades SMC, it's so easy to overcomplicate things and have 4, 5, 6 different OBs. It doesn't. I'm not interested what happens in 1989 or 2007. Okay, I'm focused on current structure. So here on the daily, this is focused on current structure. That's all that matters to me. Same thing on the 1 hour. 1 hour structure, current structure. And if you can get these two timeframes to align, you're on side for a good narrative. Now, what you'll often find before we get into some trades is sometimes these timeframes will be lagging. When the daily starts to move higher, and could be, for example, here, everything's aligning here. We've got market structure bullish, tap into a PD array, drawing liquidity above. So things are aligning, but H1 order flow could still be bearish. Price could still be around this area. So at this point, there's a disconnect. You've got to wait for that disconnect to then align. Okay, and if you can get into flow with this, you can then play off the back of this once we form that higher high. It's as simple as that. Okay, there's one step deeper with this, which is substructure, but I cover this inside Envision quite a lot. But I want to show you the trades that I'm currently in. Right now, we're going to take that same framework and we're going to apply it to pound yen. How many of you trade pound yen? Maybe not a lot of you, but I'll be interested to know. So timeframes I use mainly, although we use the monthly, the weekly, of course, for context, main timeframes are daily, 1 hour, lower timeframes, 2 minute, 5 minute. Keep it as simple as possible. So here, from a daily time frame, if we bring what we just talked about with daily bias up, what do we have? 3 things. Market structure. Is it bullish or bearish? Draw on liquidity. And then last but not least, which is an OB, fair value gap, or sell side liquidity sweep in this example. Right, so if we come back to this first question, market structure, is it bullish or bearish? Right, we've got a higher high that's printed, price has come down, it's taken out this swing low, but the question I want to ask you is, think about how we've broken. That's always the key question. How do we break is more important than have we broken, because how we break tells us about what's about to happen next. And this gives me the fuel to then enter these trades with confidence and conviction. Okay, so here you can see that we've wicked below. We've broke with lack of intent, which means fuel for more upside. So even before this move even took place, I was looking for longs. Okay, so market structure is still bullish. We've taken liquidity. GJ does this a lot where it sweeps the lows and it just adds fuel to the fire. If we look at the yen basket as well, which is the complete opposite to GJ, we use this inside Envision markets as a cracking correlation. You can see we've had the move to the upside, we've respected this OB, and we've had that clear push away. So yen basket's bearish, pound yen is bullish. This is great. Draw on liquidity. Where's the draw on liquidity that supports the daily bias? Here, the 200 mark, which is not quite yet been taken, and I've been waiting on this level for a while. It got 2.5 pips away and then turned around to here. Same thing here. The 2 draws on liquidity. 1, the swing point. 2nd, this intermediate swing point. Last thing, PD array. Did we tap into an OB, fair value gap, sell side liquidity sweep? Yep, sell side, and we also tapped into an OB. Okay, so this is bullish. Put a yes in the chat if you understand. 1 hour, exactly as I discussed before, which is somewhere here. Look at this. Look at what I said here on the 1 hour. Daily's bullish. 1 hour, we need it to be bullish. Lower low, lower high, lower low, into a new high high. What do we have here? So this is the time frames aligning. Lower low, lower high, lower low. Potential low of the week because it formed on a Monday. Clear move to the upside, break of structure, and we form a high. Then, as expected, because replay mode isn't working, but we had that flush down, cleared out liquidity, and tapped into an OB. So it's the same model as we just discussed. Okay. Now, when we tapped into that OB, of course, I'm looking for entries, and this is the why I'm even involved in this trade as a whole. So this is currently running. I banked a day trade yesterday, so I got out of the high. Swing trade is currently running at 5% here. And then the second swing trade is running at 2%. So we're running over 7% profit at this point. Okay, so this is very nice with these swing trades. And then in terms of a lower time frame entry, I'll quickly show you. And the funny thing is about this is inside Envision, we do a live trading session every Thursday. So we jump on London Open and see what develops in the markets. If something develops, I'll of course take it on the live. Now, we called this in advance on the live and we were looking at GJ. So what do we get? Lower time frame model shapes up. We get a breaking structure with intent. Understanding GJ's characteristics, it doesn't like to pull back sometimes when it isn't that impulsive phase. You can see here, look, people expecting pullbacks, doesn't take place, it just goes. So I understand that because I've traded this pair for a long time. So I got involved, safe stop below, able to remove risk ahead of news, and then news was already priced in and just gave that volume into the markets. Incredible position. So day trade banked, which was beautiful. And then this morning we got a scaling position once again from that decisional OB prior to the break of structure. Very nice position, took that solid. Simple as that. Okay, if you've got any questions, let me know. But these are great positions to be able to hold into next week. I'm going to show you a different example on dollar Swiss. Okay. Now, this should make a lot more sense. Of course, I'm speed running through this. We haven't got a whole day to go through this, but I'm trying to break it down in a simplistic fashion for you. So we're going to take a look at dollar Swiss because I want to show you the importance of being on side with daily bias. Once you have this on side, everything else becomes a lot easier. So common sense, DXY on the side, just for positive correlation, but our main focus is dollar Swiss. Market structure, is it bullish or bearish? Bearish. Why? Come back to our questions. Market structure, lower low, lower high, lower low. So we understand this phase is a pullback phase. Still looking for bearish territory. Okay, where do we tap into, funnily enough? Look at the precision on some of these areas. The decisional OB that causes the break of structure. We've been looking for this area. Okay, taps in with beautiful precision. This then causes a mitigation and we start to move lower. Now, all that's happening now on dollar Swiss, as you can see with DXY, pretty much similar. Dollar Swiss is lagging behind euro dollar. Euro dollar's already moved, but we can see that we just have this pause. Now, this pause in price is just the distribution to continue likely moving lower. So we're anticipating this in advance. Okay, so daily, bearish. As we move lower, trading view glitching out again. Let's try and get it working. Try and get trading view working. It's glitching out. It's been doing this all week. I don't know why. Right, so DXY on the left-hand screen. dollar Swiss on the right hand side. Same sort of picture. Okay, this is going to make sense in a minute, or should do. Keep it simple. Look at how simple my charts are. Is there 20 different OBs on that chart? No, there isn't. Okay, we have a clear framework, and that framework makes sense. Order flow was bullish. As you can see on the 1 hour, higher high, higher low, higher high. We then had that shift in market structure to the downside, forming that obvious lower low. So market structure is bearish, which aligns with the daily. Where's our draw on liquidity that backs things up? Well, if the trend is going to continue, this is a lower low. This at some point, whether it's here, whether it's here, is going to get taken because this is our draw on liquidity. Unless price takes this swing high, this is a weak low. This is our target. So if you understand that and you've been in the markets for some time and you see the conviction of how often this plays out, you will have a lot of confidence in this narrative. Okay, so draw on liquidity below structure here. Then what we have is nice corrective pullback. PDRA taps into 50% of this H1 fair value gap, and then we start to shift to the downside. Now, where a lot of people mistake things as well, if I can use replay mode here, it would be very helpful. Trading view, there we go, thank you. So that's helpful. So what confuses a lot of people as well is they look for that first trade. Okay, even if you understand what I've been breaking down now, you might be looking for that first trade. But once that first trade goes, you're like, well, you know, the move's already gone now. There's no other opportunities. Inside Envision, we're all over this. We know every time price pulls back into an OB/PDRA becomes an opportunity to get involved in that move. Because this is simply what we like to call substructure. This is what I like to call substructure, right? So order flow, bearish, lower low formed. We've had that pullback. As soon as we initiate an internal shift, which just basically backs up structure, moving to the downside, this entire leg is then substructure. And this is a live example for you, right? So what does then price do? It's going to staircase to the downside. We move lower, lower low form, engineer of liquidity below, price taps into a PDRA, trade opportunity here. There was a trade here. Okay, trade there, London kill zone, beautiful. Then price moves lower, taps lower. At this point, we're going to seek more volume. Every time, like I said, every time price pulls back, it's an opportunity to short. Then again, you know, we get a pullback, you look to get short. It's the same thing. So you may get, instead of one trade, you may get 3, 4, 5 trades in here. And this is how myself and others in the community are able to just milk these trades, because we understand with conviction that our narrative is bearish here. All right, so we pull back. When's this? New York open kill zone, 1 p.m. UK time. Another trade opportunity. All right, it's not the cleanest price action, but you can see you're happy playing this because of your conviction with this. Okay, so see how this plays out. So very beautiful. And then where is current price? We're currently here holding this area to the left so far. So we're currently holding this area. I'd be looking for a couple things. Ideally, this gets taken. Equal highs above now. I'd be expecting price to take this, some form of liquidity sweep in here, entry model to the downside, and confirms bearish structure. Even if we do take out sort of this high, we're still following structure, right? Every time we pull back, it becomes an opportunity to short that with the draw on liquidity below, right? So the beneficial point behind this is I'm not confused in the markets because I'm not looking for longs and shorts. Once I've got my daily bias sorted, which in this case is bearish, I'm looking for shorts. Much like a horse walking down the road with blinkers on, right? As much as it's important sometimes to remain neutral and not have a bias, I'm a big believer in having that bias because you back yourself and you have that conviction with it. And if you're wrong, you take it on the chin, you learn from it, you come back. That's mastery. That's the importance of learning how to trade and getting better with time. So this overall is showing you that clear example of daily bias. And then this is just to highlight how the week plays out. Notice how we have high of the week forms on Tuesday, low of the week currently on Thursday. Could it be taken today? Don't think so, but we've got that low of the week. So this is clearly weekly cycle playing out to an absolute T. Okay, so that should make a lot more sense to you. For everyone in the live right now, just put a little Y in the chat just to make sense of what I've been talking about. It should make sense for you. So have a look at some of your questions. Pound yen moving beautifully. The plan of action is here. I'm going to see how the market comes into a close, but structure's not changed. I will happily hold this into next week if structure still backs it up. The reason being is, and you need to understand this, no one talks about this. If I'm holding this on personal capital, funded capital's a bit different. I'm getting paid to hold this position. Why? Because on pound yen longs, you're getting paid a positive swap. So every day that trade ticks over, I'm getting paid commission on holding that trade. So it benefits me to sit back stress-free, let the trade run, give it room to breathe. I'm getting paid and it's a swing trade, okay? Let's have a look at some questions. How's it going, guys? Hey, Thomas. So Mark said, it all looks so simple, but when once it is time to enter, the trade goes into drawdown. That's where the emotions come to play. That's your edge, right? You're going to get, I'm not going to say that I don't take losses. I do take losses. Every single one of our trades that we take is posted inside InVision Markets. We post it in the Discord with transparency. We understand that a lot of people are not actually sharing that, so it's good for us to actually share that with conviction. You're not always going to take winning trades, but when you get trades like this that backs up what you're doing, you know, even if I did take a 1% loss in here, which I didn't, but let's say you take a loss and you take a loss in here. If you have that conviction and the confidence in yourself to then execute that edge because you have that strategy in place, and then you take a win, and then you take another win, right? You've just taken 1 or 2 losses, let's say, but your edge is correct. You're banking heavily on the back of that. Like I said, this is floating P&L, so I'm not going to get overly precise with, you know, this is bank profit because it's not bank profit yet. So I'm not going to bring my confidence or ego into the matters. But from floating P&L, 5% and 2.5, we're running 7.5 in the course of a day. You see, so the ability to be able to read the charts and read the narrative and then play it is the real skill set. A lot of you really focus on entries, but have so much weight on entries. Entries are important, yes, but what is it how good I can enter the markets if my narrative is wrong? If I'm on the wrong side of the markets and I'm looking for shorts here and maybe even here, right, I may be able to call a very nice timely entry, but my narrative's wrong, so it's not going to benefit me. So narrative always first. Your focus should be on that. Then entries come secondary, right? And what I found with myself is my narrative when I first started trading the style would have been likely 40%, 50% of the time. I may be correct with the narrative. Over time, that then went to 60, 70. And roughly now I'd say with my narrative, I'm roughly right 80, 85% of the time. So I can back myself with these trades to take them because I know where the market's going to go with some form of conviction. Is there surprises? For sure, but you back yourself. Yeah, the pay commission on swaps is something that a lot of people don't know, but it's very beneficial. Okay. Are there pre-built trading strategies or templates available for users to customize inside InVision Markets? Yes, we have everything tailored for you. So although it's going to require your work up front to watch the content, you know, get involved in the live trading sessions, watch me trade, watch the team trade, jump on journal audits and actually send in your trades and get feedback from myself and the team, you have the opportunity to get the entry model we use, very simply, get the strategy we use, and it's broken down in a very simplistic fashion. And then if you want to add context and add other things like SMT and correlation, you can do that, but you don't need to. We find from a lot of our traders, some of our traders with the biggest payouts One of them was with ThinkCapital, which was incredible. They keep things very simple. Very simple, follow the edge. That's that. Thank you guys. Appreciate the good comments. Thank you for teaching and sharing personal strategy. You're welcome. Would you say Envision Markets is better than other communities? 100%. I'm obviously biased because it's mine. However, what we do is really different from anyone else, to be honest. Like the fact that we do, live trading sessions, we even review your trades taken and we'll give you that direct feedback is so important. The fact that we've even come out with a 12-week accelerator now to get you from zero to funding in 12 weeks is a massive thing. If I'd have had that call it 5-6 years ago, I'd have been all over that every day of the week. So we're really doing things completely different to anyone else. Someone's asked a question about draw on liquidity. How do you identify the draw on liquidity? I'm not familiar with this. Okay, so very simply, if we break this down, let's go back to the chart. It all comes down to, in order to draw in the draw on liquidity and understand what draw on liquidity to focus on, the first concept you need to understand is market structure. The reason for this is what good is it that I've got a draw on liquidity below if the trend is bullish, right? At times we're obviously going to sweep this, but the narrative remains the same. So the first principle is market structure. Are we bullish or bearish? And how you identify that is one of the main simple concepts that you learn when you come into trading. Is the trend bullish or bearish? Are we forming higher highs, higher lows, higher highs? Or are we forming lower lows, lower highs, and lower lows, right? So keep it very simple. Once you've got that in play, then your next primary focus is identifying the draw on liquidity, so the dollar. So how do we do that? Well, in line with the daily bias, which is bullish, ask yourself this, if the trend is going to continue bullish from here and protect this low, this becomes a strong low. So where's the first point the price is going to target if the trend on this time frame is going to continue? The swing high. Why? Because that's trend continuation. Higher low, higher high. This is the draw on liquidity. It supports the daily bias. So with that in mind, that's our target. So now we've already got market structure, bullish, draw on liquidity above. Sometimes you'll even get 2 or 3. There could be one here, one here, one here, right? All draws on liquidity, with this being the main target. Then last but not least, what do we have? Tap into a PD array. Here you can see it's tapped into an OB. Even if we were to sweep this liquidity with a lack of intent, that's perfect. That's another example of price supporting that bullish narrative, with momentum backing up the move, right? So pound yen, clear example right now with what I said before. With the daily. The reason I was able to get involved in these longs from the prices that I got involved in, which we're talking 196s for the first one, we're now at 198.53, so it's moved a considerable distance, is because I understand daily bias. What have we done? If you look at this, and this is where you can't get confused. This is the pair mastery. This is understanding a currency pair with mastery. If you see that, a lot of traders are going to panic because you look at that and you say, oh, there's a lot of intention. This is looking heavy to the downside. But the truth is, it's about how do we break? It doesn't matter the fact that we've broken that low. What is important is how do we break? You can see here, little pause in price, hasn't broken with any sort of intention. And by the word intention, literally means aggression. What happens next? First sign of delivery to the upside. And then you can start to see how this process was formed. Where's the target for price? 200. Where's my TP? 200. Of course, I'm going to trail along the way. I'm not going to allow for big swings of fluctuation in P&L, but that's the main target. Okay. The only area I would consider right now where we may start to see some form of reaction is the area that we're currently in, because we're currently in this daily area. So if we were going to see pullbacks, it's from this daily area, which if we pinpoint a 1 hour area, you can see we're having a little bit of a pullback. Yeah, it makes sense that we're seeing a little bit of a pullback from this area because we're getting into the origin of this move now. Now, the origin of the move is important. Does anyone know why the origin of the move is so important? Let me know. This is a very interesting question. This will test a lot of you. Why is the origin of the move important? Why am I expecting a reaction from here? Let me know. I think there's a bit of lag in the chat, so I'll answer it for you. The origin of the move is important because this is where the orders from the bigger players comes into the market originally. So when you factor that in, of course, we're going to see reactions when we start to tap into these sort of areas and maybe even this area here. I would expect a pullback and maybe even the same thing here. But what does this become? Opportunity, opportunity to get long. And then all of a sudden, you've got 1, 2, potentially 4 trades. Even if you take one loss, is it going to dig into the P&L a lot? No. You've got a recipe for success just by keeping things very simple. And like I said before, positive swaps, I'm getting paid to hold the trade. Yeah, someone put it, reaction is possible. Because we're in this area, we're expecting a reaction. There's a reason price is reacting. Remember, there's a reason why the market does everything it does. The market is not random. I don't care what you say. I can show you so many examples of where, yeah, yesterday was a prime example. Let me show you. So I've got this marked on the charts. Pound news, 12 p.m. UK time. Now, isn't it funny that at news, price has already been priced in. We've swept Asia lows, come down, swept a lot of liquidity, tapped into a POI, already delivered that initial intention. News comes out and it just spikes the volume. That's all it's doing. We see it time and time again inside Envision where NFP comes out. Now, I'm not trading NFP. That wouldn't be the smartest thing, to do. I'm not full margin NFP, but we can understand with a degree of certainty where price is going to go because everything's priced in. So usually what we'll find is there'll be a clear unmitigated POI or an obvious liquidity pool. Price will do it with such a degree of precision that you would look back on that and say, woof, that's crazy. I could show you multiple examples, right? So that's that. Even if we were breaking down euro dollar is such a clean pair right now. This is a pair that we've been tracking for a while. A lot of beautiful trades. How many of you trade euro dollar? So if we just quickly break down, what I'm going to do is I'll break down daily bias on this, and then any follow-up questions, I'll answer them. Right, so DXY on the left, because it's inverse correlation to euro dollar. And of course, euro dollar is the main watch, right? What do we have? Come back to the fundamentals again. Market structure, is it bullish or bearish? High, 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 low, high, high. It's bullish. Okay. We then sweep liquidity. Oh, isn't it funny that we tap into that decisional? Look at the precision here. This is the range that starts to reaccumulate prior to the break in structure. So isn't it funny how we sell off, buy back aggressive with NFP? This is obvious territory for buying pressure. Okay, daily bias, very obviously bullish. You can see I've already got marked out here the DOL, the draw on liquidity above, and then here the DOL, the draw on liquidity below. And we also have, if we want to be very specific, we actually have this DOL as well, and then this as well, right? So clear areas of price. Now, what we'll likely see, as we're seeing to close the week, is a little bit of a sell-off, but next week is likely to continue to at least these sort of areas before any sort of reaction happens. So market structure, bullish, drawn liquidity above. We've tapped into a PD array, moved away with momentum. All three check-in points have been ticked off. Daily bias, bullish. Okay, remember, the reason I can explain this to you with so much precision and conviction is I do this every day. We do this every day inside Envision Markets. I've been doing this for years. I have nearly a decade in the market at this point. This is like tying my shoelace, right? So here, 1 hour chart, we can see what have we got. Market structure was bearish. You can see lower low, lower high, lower low, internal shift, then external shift into a new higher high. So at this point, we're able to start looking for buys. And there was a buy in here that I took. I think I took a break even in here. There was a few traders inside Envision that caught some nice wins in here, beautiful. And then what happened here? It's the same framework all the time. It's literally rinse and repeat. And this goes into effect on both FX and futures. You've got price pushes up. Look at this. What do we do? Why does price pause here? We're clearly bullish, so why does price pause? To tempt traders into early sells. This is a trap for sellers. Now, by trapping sellers, what do? We generate more liquidity above. Look at how many highs are above. This is a weak high. You should not be looking for sells. Or if you are looking for sells and you are advanced, of course, you can be in and out of the markets quite quick. Once again, some of the traders inside Envision can do that. But for the main part, the narrative is bullish. So we can look at higher prices, which we expected. So there was a buy in here, not there, it was here, London Open, which is a little bit later, and you can then capitalize on that next trade. Now, overall price leg here, clearly bullish. What am I looking at coming into next week? Simply, it's the same entry model, higher high, higher low, higher high. Price comes down, taps into this area. It's an OB, it's not a high probability one, but it is a pause in price, which is why we've seen that OB. But we can actually take this off and just focus on this. There's 3 points that we can look at. Now, I've covered mainly 2, so we'll stick to 2 on this webinar, but there's 3 points, right? Just to quickly cover it. Point number 1, sell side trap. Point number 2, decisional. Point number 3, extreme. That's what I'm looking for. If price taps into here, gives me my confirmation on the lower time frames. I'm looking for a long, and I'm looking to execute that one very well. If price reacts or gives a break even or a small win, goes down into the extreme, same protocol, same thing. Now, the reason we also look for liquidity plays is price doesn't have to pull into those OBs. So if we take liquidity, usually previous session, previous day, this can be a good opportunity for long plays as well. Targeting what? The dollar. Can we see how simple that is? Yeah, so for those of you in the chats that got caught in sellers traps, you know, this is a free webinar, so there's only a certain amount of things that can break down on this webinar. However, I'm trying to give you as much value as I possibly can and break it down in such a simplistic fashion that you should be light bulbs going off in your head. There's no reason you should be selling in here. No reason, because you're on the wrong side of the market. So by that simple framework that we've just discussed, you're able to read higher time frame structure, which is bullish, read the 1 hour, and then you're able to execute that lower time frame entry according to your model. And of course, inside Envision, we obviously have those entry models laid out for you in a package. Okay, keep it as simple as you can. All these people with egos online that want to catch the highs and the lows, right? I'll be honest, you shouldn't be following them. try not to execute your ego in the markets. Ego in the markets will destroy you. If you're trying to call high tops and bottoms like this, it's a recipe for disaster. If you drop your ego, drop your pride, play order flow, pro-trend environments for the most part, you will do very well if you learn this skill and you master this, right? The markets is about mastery. If you can master the small things, you can master the big things. But the truth of the matter is people don't want to master the narrative. They want to, you know, we see it. We've seen it before, even inside Envision. Someone will come in, not everyone, for the most part. A lot of people have that mindset to succeed, and they do. But you will see it with a couple of people where they'll join, they'll miss all the first videos inside Envision Technicals and go straight to entries. Yeah, it's a disaster because you've not got the fundamentals in place. It doesn't matter about the entry model. The entry model is the last part of the jigsaw. What is the main part of the jigsaw is understanding how the markets move, understanding how to build a narrative, understanding how to read market structure, right? When market structure clicked for me, everything changed. Everything changed. And this is how I'm able to now catch trades like this, which the confirmation of both these trades will be inside Envision once they're closed. And I posted the confirmation of the first trade yesterday as well. Keep it simple. Is everyone enjoying the stream? Thank you for the feedback. Yeah, honestly, NASDAQ is the same. I trade NASDAQ. So the user pinned the market, dropped a comment. I trade gold and NASDAQ sometimes, but primarily focused on gold only. Gold's a beautiful pair. We have one of our members, Yono, does very well on gold. For myself, I do well on NASDAQ as well. NASDAQ is beautiful. I've just recently integrated futures. I've now got over 400K in funding with that, and I'm looking to just continue scaling things with futures as well. So things are, but it all comes back to the fundamentals of if you've built the foundation with FX, futures will be a bit easier to some degree. There's a few more things in place, such as time and price is a little bit more important. Timing of the day is vital inside futures. But if you understand the framework of how to build a narrative, it's the exact same thing, okay? If we were to go on NQ now, I've got all my drawings on a different layout, but we'll just look at this. If you're looking at this and we take the concept of what we just broken down with daily bias, let's get ES on here. The concept of what we just discussed with daily bias is price on these two, bullish or bearish. Think of market structure, draw on liquidity, PD ray. Yeah, if gold's been rough for you this week, honestly, Mark, that can happen sometimes. Just reset yourself. Just reset yourself. It happens to everyone, okay? Happens to every single person. So here, bullish. Why? It's different market, different asset class. I can break it down with ease. What have we done? All-time highs, right? So if you look at the futures market, for the most part, I don't care what anyone says, this is primarily what I like to call a buy pair. Why? Because for the most part, although we do get these flush downs every now and again to reset price and rebalance, it is a buy pair. We are always making our all-time highs. So with that, even that edge in itself is so simple, but most people go against it, right? If you've got a buy pair, you want to be looking primarily for longs. It's the reason I look for longs on GJ a lot of the time. It's the reason a lot of our traders who trade gold look for longs on gold, because once again, all-time highs. Same with NASDAQ and ES. Okay, so keep it very simple. Now here, market structure, very obviously bullish. Higher high, potential higher low that's not been confirmed yet, but it will be as soon as we break. This is not external structure. There isn't really that much external structure on NASDAQ anyway. This is just all internal structure. So any time we do take these lows, is just a sweep of liquidity. You can see anytime we do break, it's reversed pretty quickly afterwards. Market structure, bullish. Where's our draw on liquidity? Where's our doll? Above structure, all-time highs, expecting this to be reeled through in the next week or two. Okay, same on ES. It's the exact same structure. Then you go down to the 1 hour. You go down to the 1 hour, you start to put the pieces together. We've got a daily bullish. We're looking for confirmation of that to see if the time frames align. Have we got that? Yes, we have. Why? Because we've got the sweep of liquidity. You can see now we've obviously got this move here, price break structure to the upside. So we got higher high, higher low, higher high. Now, no clear shift in market structure here because the pair is slightly different. So what we get instead is an internal shift. Internal shift in market structure to the upside here. Price respects the lows. You can see we turn around, tap into that decisional. Different market. Look at that. Look at that. Right? Completely different market. Where does price tap into? Decisional OB. Isn't that funny? Right? Then we push higher. You can see with obvious intention. Form higher high. We come down to sweep liquidity and we push higher. So even for today, we're closing the week soon, so I wouldn't be surprised if we do just pause around here. We don't have to take this high today, but coming into next week, what I expect to happen is we're not too far off all-time highs being taken once again. I would expect something like this to take place where we just move to the upside and we start to take this all-time high once again. Simple, hey? Simple. Yeah, we'll close off the stream soon, but any questions, let me know. Drop your questions now. Drop your questions now. Got roughly 10 minutes, so drop your questions. Let's see if there's any questions that I've missed out on as well. Yeah, you got caught in that seller's trap and it hit your stop on Euro USD. Understandable. Just remember daily bias and what we discussed today. It'll help you massively. You're welcome. Very detailed explanation on drawn liquidity. You appreciate it. Thank you. Yeah, market's not random at all. There's a purpose behind anything. Whether you're on the 15-second time frame, whether you're on the 1 hour, the monthly, there's a purpose behind everything. Why should I choose for Envision? What sets you apart from the rest? Is this strategies? Because we've got everything inside Envision. It's not just a course. I put my heart and soul into Envision. So did the team. It's not just me. I've got a full team behind me as well. We've got 5 people on the team now, and we have everything for you. It's not even just a mentorship either. You know, you have a lot of mentorship groups online, which to some degree, some of them are great. But for what we do, we go above and beyond. We're in the trenches with you. I'm taking these trades with you. I'm showing you why I took the trades. Then I'm calling them on streams. Then we're reviewing the trades that you've taken inside your journals. We've got a 12-week framework for you to go from zero funding to then funding, as long as you follow the steps. Week 1 to 2, you've got deliverables to do. You've got homework to do. You've got things to really focus on, right? Which week 1 to 2 is mainly psychology, because in order to push forward, we have to go back to the root cause of your mental beliefs. What do you believe about money? Do you have any lack? Do you have any abundance towards money? What's your beliefs telling you about money? Because that then interlinks with the markets. What's your beliefs about success? Do you believe you can be successful in the markets? All these things come into the equation. So we break that down first in weeks 1 and 2. We're coming into the end of week 2 now, and then we move forward into technicals. Of course, daily bias, substructure, how to actually build a rotation strategy with funded accounts to make sure you milk them and get the most payouts. There's a strategy and intention behind everything we do. So it's not just, oh, you buy a funded account and just wing it. No. We've got a full model for you set out, which is simply you follow it and it's there for you. And if you do the work, you've got the results on the other side. Then, like I said, we break down your journals. Call it one of you on the stream. Let's pinpoint someone. Like Mark, if you were to, let's say, have a month or two inside Envision, send me your trades. I will review them. The team will review them. We'll get back to you with real feedback. And it means that you could be at a point where you break even, or you're slightly profitable, or you maybe even draw down. Guarantee you apply those tweaks, your results are going to go through the roof. Because of my experience, then the team's experience, we sit down together and mastermind and we figure out what's the most specific steps that Mark needs to take to push forward into where he wants to go. So it's very personalized. Okay, that's really important. And then we have coaching calls every week. I do one-to-one coaching as well, which is a separate package, which sold out very quickly. But the next phase of that will be available in September, October. What time frame best to trade gold? I don't trade gold, I monitor it. But once again, if you follow the same system, it's the same on every single asset class. Right? Pound yen rallying nicely. Very nice. Right, so to answer your question on gold, it's the same framework, mate. Don't overcomplicate the markets. I know sometimes the markets feel complex, which to some degree, there's a lot of different layers in the market. But daily, 1 hour, lower time frames for the entries. You can, of course, add in multiple other factors like the weekly cycle, the monthly cycle, the 4 hour, the 15-minute. Of course, like I do all that. Do you need to do that? No. The goal for me on this webinar was to break these things down for you in a simplistic package with 3 time frames: daily, 1 hour, and call it the 5-minute. That's all you really need. Okay. And if you wanted to take these trades on a higher time frame, like how many of you got full-time jobs? That's a good question. Has anyone got full-time jobs in here that can't be on the markets? What if I was to tell you that you can execute these same trades on the 1 hour and not even have to do the lower time frames? So you can actually take the trades from the 1 hour, set and forget, pretty much like I've done here, and you can just sit back, do your day job, earn money, which takes the pressure off trading to then perform at your best. Because for a lot of you, you're putting way too much emphasis on making money in the markets. Put it this way. My girlfriend done a video, which is a great topic, actually. I've never heard about it in the markets, but it's a good concept. In order to make money, you need money. Interesting concept, right? Meaning that if you're trying to really scrape by in the markets and try and fight for your money, you're not going to really make money because you're not in the right mindset. If I needed to make money in the markets, I'm looking for every single way that I can milk money out of the markets, which is going to cause a lot of frustration, a lot of stress, a lot of unnecessary losses. There's a lot of things that can go wrong. If I'm sat here and I don't need the money, I can perform very well because you're performing in a flow, which is your goal. You want to be in a flow. What pairs you trade most and how often? I trade 3 pairs: EU, GJ, which is the trades that I'm in now, and dollar Swiss. All 3 pairs, great on FX. That's my FX side. Futures, I trade both NASDAQ and ES. Seem to go in phases with that. I preferred NASDAQ, then I preferred ES. NASDAQ's now moving a bit nicer again, so I go back and forth between them two. And then how often? For me, I like to dial into London open kill zone for FX. Now that I've started to integrate futures, I will still trade trades on FX in New York, but I'm mainly focused on futures coming into the back end of New York. So after 2:30 UK time, which is 9:30 AM New York, that's when I'm a bit more dialed in on futures. And I can't afford to focus on FX at that point because futures moves very quick, so I need to have my full focus on that. Do you take fixed pips for your stop loss and fix RRs for your trades too? No, the reason I don't do that, let me quickly show you. Right, let's say this is the lower time frames and I'm looking for a trade. Keep this in mind always, right? Long after this webinar ends. The reason we don't do fixed stop losses is because you're putting your expectations of the market, you're putting your ego in the market. How is it up to me that I come into the markets every time on GJ and I look for a 10 pip stop? How does that make any sense? One day my stop's going to be here, the next day it's going to be here, the next day it's going to be here. How does that make sense? The amount of times I'm going to be wicked out of trades for price to then go does not make any sort of sense. So what you do is you allow market structure to tell you where you need to put your stop, which for me, for the most part, is usually behind a structural low or in a sell, a structural high. And then we have different options available to be able to stop clip things a little bit, but it is in the form of structure. It's not just 10 pips because I want a 10 pip stop. How do I decide that I want a 10 pip stop and the market's going to respect that? That's this ego in the markets. Get rid of that. I let market structure tell me what my stop loss should be, and I let the market structure tell me what my RR should be. If it's a 1 to 2 to Asia highs, I'll take the 1 to 2. If it's a 1 to 5 to Asia highs, then I'll take the 1 to 5. If I'm taking a swing trade and the target is a 12 to 1, then I'll take 12 to 1 and I'll trail my stops along the way. Pretty much like this is, you know, like target for this trade, it's probably just above halfway through, I guess you could say now. 8%, 6%. You know, you got a good 14, 15% there, just on one trade idea, 2 trades. And ideally, this won't be it. Ideally, next week coming into the weekend, I get another opportunity to get involved in the move, and then maybe even one more as we start to pause here around this area. I would expect another opportunity to come soon, probably next week, maybe Monday. Okay, so bear that in mind. It's never my expectation to say I want a such and such pip stop. That's not up to me. That's really not up to me. Yeah, but overall, guys, hope you enjoyed the webinar. I'm going to shoot because I've got other things to do. I'm going to manage these trades. I've got a one-to-one coaching call that starts at 12:30, so I need to get ready for that. And overall, hope you enjoyed it. Take into consideration everything I've said today. This should be very valuable for you, and it's something to really reflect on, come back to, rewatch, and take notes on and apply. But overall, hope you enjoyed the webinar, and I'll speak to you soon.